Hello and welcome. You're watching Your Trades on ET Now. I am Snehisha and with me as always is Priyanka on this show. Let's take a look at what the markets have done in today's trading session. What started out and seemed to be a good day of trade today has not ended at the day's highest point because you have Nifty that has just closed shy of the 23,700 mark. 696 to be precise is where we have closed on the Nifty today. A slight bit of a gash coming in 0.2% lower. Sensex also 0.4% lower. It's the rupee that has stolen the show today and not in the good way because we have hit yet another record low on the rupee today, 87.4. In fact, even below that is where we've gone on the rupee today. India VIX, we had nicely come down below the 14 mark, but now we are nominally above it because once again we've seen a 0.5% spike coming in over there. Amid all of this, Nifty Bank was the real outperformer today because 4/10 of an uptick on that index and closed above the 50,300 mark is where the Nifty Bank is right now. If you take a look at the broader markets, those are the ones that have kept the advance decline ratio in the favor of the advances because if let's pull up a Nifty mid-cap and see what that index has done over the course of the day, started strong and held on to all of those gains that had accumulated over the course of the day. 0.7 of an uptick coming in on Nifty Bank, 0.7% and Nifty small cap too, a real outperformer in today's trading session, almost a 2% uptick coming in on the Nifty small cap index today. Sectorally, if you take a look, Nifty Media was your biggest sectoral gainer in today's trade, followed by metal, energy, PSU banks have done rather well today, followed by pharma. Nifty Bank and Nifty IT has ended rather flat but in the green nonetheless. What's not done well today is Nifty Auto has ended flat but with a slight negative bias. Nifty FMCG down about 1.5% and Nifty Realty down 2%. So FMCG and Realty were the real underperformers in today's trading session. A couple of other important highlights today. Angel One has announced their January update and healthy growth is what it has seen in its client base, and that stock has also done very well in today's trading session. In fact, that stock has closed with gains of 6% or rather more than 6% in today's trading session as well. 6.3% uptick on Angel One. This among a basket of a lot of other stocks that made it to investors' radar today and some very good gains being seen. It was a rather stock-specific market today, then focusing only on the Nifty, Priyanka.
Absolutely, Snehi. In fact, if you look at the kind of move that we saw in a single day intraday gain, what we saw yesterday, it was majorly the move. The kind of traders actually got their shot after the Trump pause, and now that has played out completely, and the trades have got unwinded. The calls got unwinding yesterday also. We saw that short covering move has already played out. Now the focus lies completely on the RBI monetary policies outcome. That's what we saw clearly. But the kind of pockets that you've highlighted, Snehi, just adding few more stocks to the standout gainers, PSU small pack, broking counters. Talk about stocks like AMC stocks, Nippon India, even Angel One, CAMS. This was majorly on the kind of the healthy growth in the client base we saw for Angel One. Not just Angel One. In fact, the entire pack was buzzing. Along with broking, AMC stocks were buzzing. If you look at the different standout gainers, power stocks, power ancillary were buzzing. Few of the capital goods stocks were buzzing. So it was, yes, you're right. It was very stock specific and a news-based trigger wherever it was. That pockets were doing very well. But the focus lies now. Focus shifts to what is the outcome of the RBI policy. But just to add it to off topics, Snehi, if you've been buying shoes up till now, you would have been looking for a UK
or
Euro
US,
or US size.
Yes,
but we will get exclusive story that India would have its own shoe size also. That's a story which we'll get you the complete in details later on the show. But talking about all eyes on the Q3 numbers, SBI, Britannia, ITC, Trent, Hero MotoCorp, these stocks could be in focus because their numbers are, and this is the last leg of nearly 8 to 10 companies which are left on Nifty to post numbers. Have seen a very muted set of earnings coming so far. So we're almost in the last 2 weeks of crucial earnings so far from here. Well, let's understand what is Nilesh Jain reading about the markets. What is his reading on the index and the levels? Let's get his perspective on the technical front. Nilesh, thank you so much for joining in for your time today. Was it a dead cat bounce or should we call it a short covering move which has largely played out? That was majorly, the traders were waiting for a move, what they caught as a, relief shot especially after what Trump gave a booster by pausing the rates, and now the move has shifted to 7th Feb and hence the unwinding of the trade is what we're seeing.
So Priyanka, we have seen a good short covering rally in last few trading sessions, and if you look at the overall structure of the Nifty now, it has ended exactly near its resistance zone of 23,800. It has faced resistance at 23,800, I would say that. And also, if you look at a 50-day moving average, that is also exactly coming at those levels. And now we need a decisive breakout above 23,800 for further momentum to continue towards 24,000. Mostly, we may see that breakout coming in maybe in a day or two. As of now, we need to wait and watch out for a sustainability of this particular move. Today, we have seen some profit taking at the higher levels, but good part of the rally that the support has shifted higher at 23,600 followed by 23,500. So overall, looking at the derivative setup of the weekly expiry expiring tomorrow, the data shows that 23,500 to 23,800, that's the 300 point tight range for the Nifty. The structure is still buy and decline till the time we don't see any breakdown below 23,500. So buy and decline should be the strategy. We have also seen a buy crossover in the momentum indicators and oscillator as well. Now coming to Bank Nifty on the other hand, where we have seen an outperformance today and the structure is still looking strong. We can expect a follow-up move to continue towards 50,800 to 51,000. That's the 200-day moving average for the Bank Nifty. So overall, structure-wise, and also on a closing basis, it's a good close for the Bank Nifty. And buy and decline should be the strategy here as well. One should keep a stop loss below 50,000 on the closing basis. So these are the spot levels. And looking at the VIX, which has witnessed a sharp cool off from the highs, so which is very much in the comfort zone for the bulls. So we expect this momentum to continue, and maybe we may see some volatility ahead of the RBI policy, but the undertone continues to remain on a positive side.
Okay, so if that is your outlook going ahead on the markets, Nilesh, amid a market like this is starting to become a stock because market, in fact, it has been that way for quite some time now. Tell us what's looking attractive to you and which stocks would you recommend for our viewers?
Right. We have seen some underperformance in the broader markets, and now today was an outperformance we have seen in the broader market, specifically Nifty Small Cap Index, where we have seen a dead cat bounce. So we may see this pullback rally to continue in the broader market and also stock specific action. We expect some pockets which are looking attractive, specifically sectors like Nifty Pharma, PSU banks. So watch out for all this space and also financial as a whole on ahead of the RBI policy. We can expect some momentum out there. So from stock specific, we have a buy recommendation in Lotus Lab. This particular stock is looking very attractive at current level, given the kind of formation that we are witnessing in this particular stock. It is on the verge of a multi-year breakout and looks strong for further upside momentum to continue towards 655. 617 should be the stop loss. And today, another sector where we have seen a good momentum, that was metals. So within metals pack, Steel Authority is something that is looking attractive. The risk and reward is looking attractive. The stock has gone into extremely oversold territory. So we expect a strong rebound in this particular stock. And on the upside, it may test 111 to 114 levels on the upside. Stop loss can be placed below 106.5.
Right, okay. So Nilesh has some interesting picks coming in. Lotus Lab and Sale is on his buying radar. Thanks very much, Nilesh, for that view and your time for 80 Now. Moving on, in fact, the time when we're talking about how budget could be a big boost to spending and consumption, we did speak to a lot many experts to understand their view. We did speak to Venu Gopal Gare, who's a managing director for Bernstein, and he has added few discretionary names in the month of January itself. He believes that capex is linear and consumption to be more non-linear. He also expects more spending towards discretionaries than the staples. Listen in what exactly he said.
A consumer primarily is not going to wait for an year to spend. So if he wants to spend, he or she wants to spend, it is going to be primarily in the next 2 quarters. So while capex is linear in some fashion, consumption is going to be relatively more non-linear. So the data on volumes is going to be very critical. And I also think that a large part of the money, if it doesn't go into SIPs or investments, which I think is not going to be the case, there'll be a larger propensity to spend for that category of consumers. It's going to be in discretionary rather than staples. So any choices somebody has to be making with respect to consumption, flavor, or volumes has to be more around small values, small ticket discretionary, could be affordable vehicles, which is essentially not affordable vehicles of two-wheelers, but affordable vehicles in cars, within maybe QSR spends, and very selectively on things like consumer durables.
Okay, that's the word coming in from Venugopal Gare of Bernstein. But let's move on then and talk about how the FNO shape and the entire derivative space has shaped up in today's trading session. The index futures trend for the February expiry, Nifty is showing some flat trends, not much to see over there. Nifty Bank, however, long build-up is what is being penciled in for Nifty Bank. Remember, there was a short covering trend being seen on both of these. From there, Nifty has gone to the other side, become flat. Nifty Bank continues to look good, and long build-up is something that we're seeing on Nifty Bank. India Wix, like I mentioned, slightly above that 14 mark is where we've ended today for India Wix. A 0.5% uptick coming in just in the last few trading minutes of the trading session today. In terms of active calls for the 6th February expiry, which is tomorrow, call writing being seen at 23,800 and 23,900 levels. Similarly, on the put side, if you see, some put writing was being seen at 23,500 and 23,600 levels, making 23,500 the next downside level to watch out for. 23,900 would be an optimistic next level for the Nifty to cross.
Okay, so looks like a range-bound trade. We do have a support, but we do have a resistance also. Let's see how markets fare out tomorrow, being the expiry move also. But now let's get you the big story of the day, and we're tracking here at this moment. It's a source-based story which my colleague Samir has gathered for us. Sources tell us that India will soon have its own size chart for the apparel as well as for the footwears, as in the process is in the last leg. My colleague Samir joins in with more details on that. Samir.
An important development in the footwear and apparel segment, that India is soon going to have its own size chart. This simply means that as of now, if you see that if you go to the market, then you buy footwear based on the international size chart, whether it be UK or US. Similar is case with the apparel segment, where you will find S, small, medium, large, or the international sizes. But India don't have its own size chart. But now all the process or the procedure has been conducted by the concerned authorities, and very soon you will find a India size chart for the apparel, for the clothing, as well as for the footwear. When it comes to the apparel segment, it is very likely that in the upcoming Bharat Tex, the textile event that is going to be conducted from 14th of Feb to 17th of Feb, the apparel Indian size chart will be introduced, and similar for footwear, within 2 months, Indian size chart for footwear is likely to be introduced. And with this Indian size chart, government understand that they will be able to address multiple targets. First one is that they will achieve that India is not going to be just a consumption driven economy, but an export driven economy, where Indian products can get much space in the global trade as well. Secondly, the Indian size chart will be framed and will be for Indian people as per their body structure, and they will be able to conveniently buy products, whether it be footwear or apparel. And the third one is that India understands that their export basket will be increased, and the qualitative products, the parameters will be upscaled as well. So India size chart for footwear and apparel very soon to be introduced.
Samir, thanks for joining us. Very interesting details is something that you've got for us over there, and we'll be closely watching and tracking the development on this story and bringing you the updates as and when we get them. But let's move on. Once again, shed some light on some stock-specific action, and a bunch of stocks were in focus today, either on the back of their earnings or individual news flows, and Rabinder is joining us with just that list. Rabinder, take it away.
Well, Angel One is in focus, where company has announced its January business update, and the number was better than expected operational metric. January client base was up by 47.5% year-on-year basis, and average client book funding book was up by almost 87% year-on-year basis, and overall turnover was up by 6.2% month-on-month basis. Moving to next, Info Edge India is in focus on back of Q3 result, where company has announced its Q3 result, and the revenue saw a growth of 3% quarter-on-quarter basis, and net profit saw net profit jump from 23.2 crore to 242 crore quarter-on-quarter basis, and EBITDA saw a jump of 12.5% year-on quarter-on-quarter basis, and margin also saw over 300 basis point quarter-on-quarter basis, and board has also approved a stock split of 1:5. Moving to next, on back of brokerage note, IGL is also in focus, where CLSA has maintained an outperform rating on IGL with target price of rupees 220. They say that the IGL has not increased CNG price in Delhi for over 3 months, and even after a cut in cheap domestic gas supply, whereas MGL and Gujarat Gas has already raised their price by 2 to 4%, and after the Delhi election, IGL may increase CNG price by 4%, and a price increase and steady volume growth could boost investor confidence and lead to a re-rating of the stock. And lastly, Symphony is also in focus, where company has announced its Q3 number, and the revenue saw a decline of 2% year-on-year basis, and company has reported a net loss of 10 crore as compared to 41 crore profit year-on-year basis, and margins saw a decline of almost 600 basis point year-on-year basis.
All right, so that's a list of stocks that were buzzing on the back of news and earnings update. Thanks very much, Ravinder, for highlighting all those stocks. But moving on, Rupesh Shah, who's the Managing Director for Corporate Affairs for Symphony, speaks about how margins are expected to grow going forward. Let's listen.
As far as new models are concerned, they are also margin accretive. So that margin also to that extent took a toll in December quarter, which should be set right. So more year as a whole, margin should be in line with what we registered April to September. So it should be a decent margin.
Okay, well, that's the management of Symphony telling us what the growth outlook is going ahead. Remember, numbers came in today, and first net loss in the last 5 years. That stock was beaten down in today's trade, down by almost 9%. But while we are talking about earnings, India's largest lender, State Bank of India, is all set to report its quarterly results. Let's go across to Gaurav to understand what we can expect from those numbers for quarter 3. Gaurav.
Well, yes, the biggest bank of India, SBI, is going to come up with the numbers, and when it comes to expectation, people are expecting higher than industry growth when it comes to loan book, and at the same time, net interest margin and asset quality is also likely to stay stable, and that is the reason why they're expecting good set of numbers from SBI. So first, let's look at the numbers. Advances are likely to grow almost at 14%, while deposit growth could be at around 11%. Now, low deposit growth can actually not be a constraint in advances growth because of the low CD ratio, and as a result, when we talk about net interest income, that can increase almost by 7%. Now, let's not forget that global yields are rising, and that is the reason we may see some pressure in net interest margins. Now, Street is expecting around 2 basis point fall in net interest margin marginally, and as a result, when we talk about PPOP, some lower staff expenses, something which can aid the PPOP growth to be around 29% on a year-on-year basis. Lastly, when we talk about the asset quality, they are not expecting any kind of stress in asset quality. In fact, asset quality is likely to stay stable, with the credit cost also stabilizing at around 0.5%, and as a result, when we talk about profitability, it is expected to grow at around 77% on a year-on-year basis. Now, let's not forget that last year in the same quarter, we have seen some impact of wage rate revision, and that is the reason why these numbers may look elevated, but overall, good set of number is what Street is expecting from SBI. When we talk about some of the commentary, now Street will be looking at the commentary in terms of slippages, how much of slippages were contributed because of the agri book, because Q3 is usually weaker for agri book. Other than that, any kind of commentary on ROA and how is it going to be, any kind of commentary on the movement of net interest margin is also going to be a key thing to watch out for. And lastly, any kind of commentary on raising capital, if SBI is looking to raise capital, is also something which can be expected from the management. But overall, good set of number is what we're expecting from SBI in third quarter.
Okay, all right. Thanks very much, Gaurav, for that brief, that what to expect from numbers, SBI numbers. All right. With this, it's a wrap on this edition of Your Trace. Thanks so much for watching.